Hi, everyone. Welcome to this episode of Dr. Linda's show. Today, I have with me here the founder and CEO of Investmint, and he will be able to explain to you how to maximize the returns on your idle cash, as well as what his company is doing to help small and medium sized businesses. So, please, over to you. Introduce yourself.
Hi, I appreciate that, Dr. Linda. We're very happy to have the opportunity to speak to the audience. We're trying to democratize and give access to the types of advice and tools and systems that larger companies get access to much later in life. But the idea here is we want to support entrepreneurs, whether you're in a startup and you're trying to scale and grow, or you're an owner operator type business. We like to call this like the too big too small problem, where you're big enough to have real problems but you're not big enough to have the resources or help in sort of doing that, and you're the entrepreneur is driving that business. Like, you really, even if you have people, it needs to be focused on like amplifying your day.
Hmm. I see. Okay, so for the sake of those watching, I have a lot of questions that I'm going to be asking him to dive deeper into what we're talking about today. But if at any point you have questions, feel free to drop it as a comment on any of the platforms you're watching from. I'll pick it up and I'll be able to ask him. Otherwise, feel free to watch to the end and see all the questions that I asked and the responses that he has been able to give. So over to you again. Can you share the origin story of your company? What inspired you to start it?
Yeah, I had spent about 20 years, I'm embarrassed to say how many years because you're going to figure out how old I am, in various investment banks, doing everything from investment banking to sales and trading. And then at the end of my career at the bank, data, automation, innovation. And I used to say that I had the best of both worlds towards the like more senior part of my banking career, where I had the ability to do innovative things, create, but with the backing of the like a great organization with a lot of funds and resources, technical and otherwise. Toward I kind of knew it was at the end where I felt I had the reverse of that. I felt I had the resources of a startup and the bureaucracy of a large bank. And I think at that point, I was getting older and I felt like I had to, if I was really passionate about doing this, and this idea of like really the underdog. Like, the idea here is that I've been a bit of an underdog in my life, but I also believe that like that's where the source of like great businesses come from. It's like the underdog, it's small businesses, it's startups, where that's really, Canada needs more of this, right? At a macro level, we're very unproductive. We have a lot of innovation issues, but I don't think of solving that at a macro level. I will say, look, what can I do? And the first thing that always came to mind is, when I sat at a big bank, if only I could bring this value to someone at the beginning of their journey, not when they can afford an investment banker or family office type offering.
Hmm, I get you. So, for somebody who is listening now, one of the questions that will be on their mind is, what, more like in concrete terms, what are those problems that your company is solving now?
Yeah, I think the first thing that we want to tackle is m- a lot of, whether the entrepreneurial businesses is what we capture the sort of let's say this ICP of, whether
Mhm.
you're smaller and scaling or you're more established, is the idea that you cash flow should be everything. And it's very interesting because I think in this day and age, a lot of people have lost that discipline and skill set because it's not accounting. It's like actually understanding the cash flow of a business, how cash behaves, how to manage it is a bit of a dying art. And again, back to the only people who have it is actually large corporations. And what we consider, I'm dating myself a little. So what we consider like a cash problem is starting at the basics of, do you have, do you have a business plan? Do you have an idea of what your cash needs are and the sources of those cash? And do you have a sense of how that will go over the course of let's say the classic 13 weeks out to 52 weeks of a year? So the first thing we want to do, because as we knew from our experience at the bank, but also talking to customers when we started the company and started, came out of stealth mode, was that people couldn't answer very basic questions about their cash. I mean, literally, not even cash flow, like how many bank accounts do I have? Like how much do I have in each bank account? So that is a critical starting point, is just aggregating that data, structuring it both in a data structure way, but also in a business way that is meaningful. But more importantly, doing this for the entrepreneur. There are people and systems trying to do a lot of that, and some quite successfully, but they are doing it at what I call the accounting level, not sort of a cash business level, but also they're trying to help amplify or simplify the bookkeeper's job or the accountant's job or the CFO. Part of the reason we've picked this, it's not just what we're trying to do, it's who we're trying to do it for. We're trying to do this for the entrepreneur who's truly the one out there making the decisions and needs the data. It's not sitting in Sage or QuickBooks or NetSuite. So the idea here is get that picture, full stop. And along the way, we always like everything we do should have a revenue attached to it or a cost savings. So at that point, what we're trying to create is just a cost savings and the opportunity to do other things, the foundation. The initial step that we do is to identify when a business has what we call idle cash. For a startup, that would be, for example, startups tend to have to raise the capital well in advance of when they need it. They may not have complicated revenues and cash flow models, but let me tell you, in this day and in the market we're in now, if you've raised $4 million, you need to spend that very carefully. Number one. So that idea of optimizing, we like to combine is our best practices that we know from banking, from the data science side, but also the piece of this where we think we're unique is you're going to get an investment professional in addition to our technology or automation, working with you to understand your business and customize it. So this is meaningful to you and it is real, as opposed to just a historical forecast turned into something by models. So once we've identified that you have idle cash, we want you to, what we say, make your money work harder. So let's say you've got $2 million sitting in the bank that you never need for any 180-day period. We've seen, companies that literally are earning 1% or 2%. If you think about you in your personal life, you would never accept 1% as a return on something. And especially if you're, say, a growth company that might have to be paying the equivalent of 20 or 30% for that equity money. At a minimum, you should be trying to, and you had to raise in advance, you want to minimize that. Or if you're an owner operator, this is the other reason we picked to be with entrepreneurs, is let's say you do that. We have a company we're working with just a few $100,000, and we're going to make them an additional $10,000 with no incremental risk. That $10,000 can either be invested back in the company or dividended out to the owner. And that's the first application of the initial problem, was get the cash flow. Let's get your banking together, get your accounting together. Let's understand what's happening from a cash perspective. And the first application is make sure that money is working hard. And then we go out in this like financial kind of audit, like health check to, what kind of risk management do you have? Like, are you part of the cash forecasting optimization is what we call cash buffering. A lot of people are grappling with market uncertainty, tariffs. So what we show them, as how we used to do this at the bank, is you don't just have to hedge like your foreign exchange risk or your interest rate risk, which we would do, is this idea of when you model your business, you look at what could happen if this customer doesn't come through or this goes up. So then you create this buffer of cash that you then dynamically adjust, because it's like the adage of a rainy day in case your furnace breaks, So that idea is the next thing. And then we go to sources of helping them get to additional sources of liquidity and funding, all the way through to helping them apply financial modeling techniques to internal projects, all the way through to helping them if a business owner wants to start getting himself prepared or herself prepared to for a business succession.
Yeah. One of the things I picked from what you said, I picked a lot of things, but one of them is that sometimes when we think of idle cash, it can look like, oh, you have this money, you don't have a need for it at all, and It's just sitting there and you use it. But another way to think about it is from that aspect of, let's say somebody have raised money, they're going to use this money. Maybe it's even part of their runway, right? But they don't need it in the short run. So instead of that money just sitting there, so it's just a different way of thinking about it. Not that this is money you no longer need. It's such a surplus,
Right.
and yeah, but you have this idle cash. You don't need it. Sometimes you see people, it can stay there 2 years, 3 years, as the case may be, because they may even raise more money.
They forget about it. I hate to tell you, like literally, sometimes it's literally forgotten. Like it's just sitting there in the bank because, as you say, they have a plan for it. It's not idle. The reason we use the term, sorry to interrupt, but idle cash is that idle cash is something that's calculated. It lives and breathes because it depends on what's going on, and you might have periods in which you need it, you don't need it. But in every business, unlike a human, like an individual, you always have a use for your cash. But a business in a given business year, by definition, may have to have the cash just sitting around, and you just want to maximize that. Like I said, especially when you're an entrepreneur, that's your every dollar there is yours.
Beautiful. That's amazing. Okay, so you've talked about the problem that you solve in terms of, let's say, somebody patronizing your business now, which is more like your core service or core product. How does that business owner or business come in? Like,
yeah, we are in what we call we're doing something a little different. I'll explain to you. So right now we are like a software company. We're using AI, but we are creating something in a hybrid model. So when we spent all of these times talking to like tons of companies at different sizes, as we refined the journey of what our product is, or how we want to solve the problem, which problems, is that we identified that there are if you're an entrepreneur and you're dealing with financial problems or opportunities, there was a few themes that came up. One was trust. There was there's very little sophistication when information is coming to them that looks trusted. It's very basic or generic information, and when other information comes to them, advice, it's not necessarily trustworthy or various things. So one of the elements that we heard is when we came in, and we, as our team, and we have I have a partner who used to be the head of trading at the bank I was at. We have an advisor who was the head of investment banking. We have all this great stuff. They wanted to hear from us. They actually, before we actually got the product, actually turned into, they wanted to understand how the world was working, how is it affected finance, and then how does finance affect them. And we were always rushing through that to try to get to the product. And then we realized that was actually part of the product. So one of the first things we did was, and this will come up maybe later in different questions, is we started as, we're experts in this, we want to help people. Then we had sort of evolved to like a classic SaaS model. And then we sort of came back out the other side as this, I call it a hybrid, where there's customization, in the sense that not like a customize the system, but I mean, like, we come in, we have like a SWAT team approach. We come into your business, we leave very, very little touch on you, but get all your data, understand things. And then we have this process in which we start working with you, solve these problems, whether it's idle cash or like whatever you need, whether it's risk management, new loans. And we do this with you at some degree manually, but then always with an eye to, we will take it on only if we can sell this to other people for scale, and also that we can automate this. And so through that process, you end up with a system at the end. You have automation, you have the best of both worlds. You're getting access to quality individual that you couldn't get access to at this cost otherwise, but then you're also getting the benefits of actual on-demand data, like cash forecasts are done, if that all, once a year. Once we've built this with you, you can look at it every day, and it's constantly updating every day. So that's kind of how we work. I hope that answered the question.
Yeah, sure, it does. Okay, let's look at your target audience, or the ideal businesses that you want to work with, or the ideal entrepreneur. So could you tell us more about that?
Yeah, so back to this idea of that because of this hybrid model, we're going a bit slower. So like we're not looking to onboard 100 customers now immediately and then 1,000. We're currently in the process of we're in negotiations with our first few paid. Like most of the customers we've been dealing with now are what we call design customers, where because they're really it's mutually beneficial and we're figuring things out together, we don't charge them. And now we are in discussions with 2 to 3 clients initially to do that conversion into the paid process, and we're going to go for up to say 10. And the way it works is we want that 10 to be very demonstrative to our future funding rounds of that we can build a funnel of these types of customers cheaply and effectively. We want to show that we can convert them. We want to show that we can then convert them, and then we can go through this hybrid process and scale. The two types of customers we're very fortunate to have is actually in these 3, 4 customers, both unpaid and in process of converting, we have very tight fits to examples of what we want. So one customer who's unpaid is a small business. They're doing about $10 million a year, which isn't that small. It's an old, mature business. It's a more mature owner, and they're doing 20% EBITDA margins. They've got a real business. It's complex. It's real, but it's not huge. And like I said, that's exactly who we want in the sense that they're not doing cash. They have a bookkeeper, a controller, and that's all they have. And they have some specialized software to their industry, but broadly not a lot of, whether it's finance or accounting tools. So part of this is we're not accountants. We're not competing with accountants or accounting software. So one of the things we do is like talk about you should be bringing in this type of accounting software because we build APIs to it. So we're helping him get access to people that would cost a lot of money for him to hire. And so that's the cost reduction piece. And we're on demand for him, like anytime, whether it's virtual or in person, we're available to them. And then we also help them, we help them with their bank. We're not a bank. We're not a broker dealer. We're not an asset manager. We're bank agnostic. So we help them open investment accounts. They decide they wanted to buy both, deposits and or ETFs, and they went through, and we give them the tools to help do that, and the knowledge of how to do this safely with their within their tolerances of risk and return. The other side of this is the startup side. We have a Series A customer. They just did a US dollar, that's like $10 million Series A. They really thought they were like a social media wellness company, and it turned out that that while that might be true, they're also 60% a real estate company because they have these physical locations. So you can imagine, both from a capital structure perspective, the expertise in the company perspective, and a lot of things they need to do, they found themselves a little bit out of sync. So they went out and hired a very competent, amazing fractional CFO. But again, they don't have expertise in all of the things they need, like assessing capital structure, getting new loans, negotiating leases, modeling construction projects from a financial perspective. They've got cross currency risk, so they're not used to, like, they have revenues and expenses in different currencies. They have interest rate exposure. So all of this is not rocket science to an investment bank or a larger company, but you can imagine a startup that's at a Series A doesn't likely have all the skills and tools to manage that. And if they did, not necessarily to automate it and have that ongoing sense of trust and advice and strategy of how to manage these foreign exchange risks, for example.
Mhm. That's excellent. I love the fact that you even talking about the like helping these customers with a hybrid model kind of thing, because at that stage, it's like they're also dealing with a lot of funds, because even though it may not be the very big companies, to that person managing that business, that's all they've got, more or less. Like,
Yes, absolutely.
yeah.
That was critical in our journey, was that realization that we couldn't necessarily got caught up in the startup it like cult. We couldn't get caught up in the fundraising cult, where it's like, if it doesn't, like, basically VCs and startups are geared to solve the simplest workflow automation problems with the simplest data requiring the least amount of trust, because that's what makes the most money. What
Mhm.
we really are passionate about, going to our original passion, is that we, and a change in our company as we evolved, is that we said, look, we're going to stop trying to please everybody here. We came in here with a mission. We came in here with 20 plus years of knowledge of finance, the client problem. We lived for the last 12 months with these clients, and we're going to put our money where our mouth is. We're going to deliver this in the way that the clients need it, and we will dare anyone to prove to us, and they say you can't build a business out of this, then I'd rather prove them wrong, as opposed to trying to build the business in the way they want me to build the business, and be constantly trying to justify my solution to the clients. Like, we just stopped doing that.
Yeah, that's amazing. That's brave too. Okay, so let's look at how your business. Okay, no, I think you've already answered that. How your business model has evolved over time. Let me ask you the next question. What business milestones have you achieved so far?
Yeah, I think the biggest one was in January, which really kicked off this process of converting from, sort of, call it like science experiments and testing, to something more operational, that operationalizable. Is that we, the design client I mentioned to you, that is the small business owner. Um, he identified that he did want to, he was, I think, making 0.9% on his money. We identified that he could not get a better rate from his bank, because we're not just, we like to say our number one thing is that we're independent in every shape or form of the answer. So we don't make more money if you invest in ETFs versus deposits. We don't make money on any particular product or strategy. We are purely advice oriented to you. So at the end of the day, nobody could get a better deposit rate, or get so we created, with them, using the tool, a set of deposits that are tradable deposits, like HISAs and ISAs, plus ETFs that are screened through an investment algorithm tailored to each company, that identified, takes into account all of their preferences and that behavior. It's quantitative in the sense as the system watches the historical cash patterns and the forecast, and then does this. They identified that they could make 4.61% with effectively the same risk as they currently had, with that was earning 0.9. So we helped them open the accounts at their bank. They went off and did those trades the first week of January. I think everybody knows what happened after January 6th. It's been a bit of a rough ride. And to be honest, there was days where I was just like, oh dear, like, this is our only client that has, like, even though it's a design client, they are literally using this live in the market, and the market is unprecedentedly volatile. And when we went around and we said, look, we're gonna, by design, what we build people is meant to take that kind of volatility. It is meant to be, you cannot lose this money because it is earmarked for something in the future. We did a quarter, so it is now it's about Easter. We're going to do a quarterly report with the system. We're going to test out some of this, and we produced a review, and it was like unbelievable. Like, we were so great. The best thing that ever could happen to us was Trump coming in and blowing up the market, because their investment portfolio, and I apologize if people have questions about some of the terms I'm going to use, please just put them in and we'll clarify them. But
Mhm.
it had a max drawdown, so that's like and any given day how much you could lose in that period, and the max drawdown was zero. The volatility of the return of the price of the stock was 0.17 of the ETF. It had a Sharpe ratio of 2. And the only thing that happened was it went from 4.61 down to 4.19.
That's amazing.
So it was the best thing ever. So that we felt, even though what we do is back testable, because by design we're not managing people's money, we're not investing people's money, we don't touch the money. It's all quantitative analysis. So we rely on the track record of BlackRock and Vanguard and, you name it, Scotia's ISAs or whoever it might be.
Hmm.
But it's still different. And one of the critical things about our company is we are traders and bankers where when we modeled something, we had to make a bet on it. There's no looseness to this. Like, oh, like if you're using an accounting system, it says this is what you should do. That's not precision. What we do is precision. And this was great because it proved it. Now, no matter how much testing and things you can show somebody, the best thing is to say, this person invested on this day, and this is what happened to the market, and this is what
Mm-hmm.
how it behaved. And so that was a big milestone for us because even though it wasn't revenue yet, it really validated a lot of who we are and what we want to do and that we are on the right path.
Mm, that's amazing. Hmm. Okay. I think like I also saw that you have a patent. So could you talk like could you
The
tell us?
patent's actually older. This is this is a bit of startup, but every startup grapples with this a little. Is that we believe we have IP, but IP is very expensive. So we haven't we're just using trade secret right now and trademarks. The patent I had, it was actually a lot of why I wanted to do this is, and my partner, who came into the company, actually was the person I had built a lot of this for. So part of the reason that I wanted him in the company wasn't just because he managed billions of dollars of trading risk for the bank, but because he could vouch for the fact that while I am a first-time founder, I have done this
Mhm.
within like similarly, but just within a company.
I
And
see.
so that's where the patent came from, is that we actually re-engineered the process to issue new stocks and bonds end to end, like from I'm talking to this company, prospecting them, to ticketing the trades out the other end,
Mhm.
and realized that we were so ahead of the market, which is why we had to build it in house, that it had huge value. So the bank that I worked at the time was looking for IP. Like a lot of banks now actually count IP in their statistics and things. So we agreed that we would go through the process in time, and I think it was about $250,000 to get that patent, which was great for me because I had a good lead with my bank. I didn't take anything. I just we parted as friends. But the
Mhm.
beauty of something like a patent is that that patent will, even though it's been assigned to the bank, will always live on in my name. So
Mhm. I see. That's cool. Okay, let's look at some of the challenges you faced in the early stages, and how did you overcome them?
yeah, I think some of this was, I'm an old founder. I like to, so the last time I had done anything entrepreneurial was over a decade ago. So just even getting started was hard. And I was confused because I said, well, how do other people start? I was an investment banker. I have connections and networks and knowledge. And I was really struggling to kind of put this all together. So one thing I realized was that the world has really changed. It has become, and that's part of the reason we migrate to entrepreneurial companies. There's so much more entrepreneurialism today than ever before, and the support and things. So one of the things that I did is I did it the way I did at the bank is I understood the business, I understood the problem, I understood. So I started building this as a non-technical founder. When I was at the bank, then I would just I would go get like my partner. I'd say, this is the business case, like sort of sell it to him. He would fund it. Then I would go get the pieces and build it. I didn't have the luxury of money other than I'm fully bootstrapped, and I didn't have the people. And so, that was really, really hard. So I full disclosure, have a messy cap table. On the journey of the company where I started realizing like we were onto something, this really could work. I couldn't build the rest of it because I was a non-technical founder. And I do a lot of mentoring and hiring and various things through my career. And on LinkedIn, it actually connected me and this young woman at Wharton in the University of Pennsylvania who was finishing her degree in finance and AI. We got talking, and she said, "Look, I have 4 months before I graduate, and I've got a job. Let's do this together." So then she came in, she did what she could do, and then we needed a full stack developer, and then she said, look, actually my best friend's a full stack developer at Penn, she's got the same issue. So then she came in and built the prototype. And then so it's been a journey, though. It's been hard because I just, as a non-technical founder, I couldn't prototype myself. I couldn't do certain things, and it's prohibitively even with the advent of AI and a lot of the productivity tools. Now keep in mind, some of this was 12 to 18 months ago, so the world has
Mhm.
changed a lot, and there's a lot more you can do now as a non-technical founder, but still, it is hard to do some of this credibly without a technical co-founder.
Hmm. uh like from what you've shared, still being able to find someone, and because that's something, irrespective of a challenge that you have, to still find a way to keep moving, right? So that's good. Okay, let's look at how do you approach decision making under uncertainty?
Yeah, I think this is like, a terrible the terrible curse of an entrepreneur, and a lot of other people have this, is that if you don't believe in yourself and what you're doing and your decision making paradigm,
Mhm.
no one else is going to believe you. But the problem, though, is that if you believe that blindly, then you're not actually evolving, you're not taking into consideration other things. So I mean, I use the phrase that I'm never wrong until I'm wrong, but I'm never wrong, because that's kind of how you have to approach it. Is like I try to run a good process. I like to think like thoughtfully myself, of
Mhm.
try to think of pros and cons, and like make sure you have all the information, all the viewpoints. I like to bounce things off partners, advisors, friends, family. I like to run a good process, but then ultimately you're left alone. No one's going to. There's no going to be this like aha moment that is perfection. So you at some point you just have to shut the process down and
Mm.
say, we're there. And then the minute you find out, like, there's nothing wrong with being wrong. You want to minimize it. As I used to do a lot of healthcare investment banking. In the drug discovery business, we talked about failing fast. The
Mm.
minute that you're wrong, you want to find out. If you're wrong, you want to find out really fast, and you want to fix it right away or pivot. And so
Mhm.
that's the way I try to run this, is that you try to be as open as possible when you're thinking about stuff, but then you have to be decisive and close it. But then you also have to be very decisive to really change your mind if the evidence isn't working in your favor.
Mm. That's good. There was a feeling fast, right? Like, but then you have to believe to be able to go out there and test it. Once it comes to entrepreneurship, there's a lot of decision making, not once a year, but
Mm.
every time.
Like 10 times a day, you're making decisions, and not all of them are inconsequential. I agree.
Yeah. So that's why I love that question of, making decisions under uncertainty, because you're almost never sure, but then you have to believe,
You can't be unsure. You can't be like the death of this is why larger corporations are so ineffective versus startups, is
Mhm.
because it's like analysis paralysis. There's all of these fear of failure, fear of risk. You can't have that in a startup. Like you don't have the resources or the luxury of that, but also you have to be very prepared to take in the feedback that the flag from the market, whether
Mhm.
is if people are
Mhm.
giving you, and be always assessing it. Does someone say something to you that triggers you? So I'll give you an example. For those who have been on this journey with us, like the company they actually had a different name at one point. It had different focuses. It always had the heart of what we've talked at the beginning, but it's evolved. And my rule is, because it's going to be hard. Like you can't just give up because it's hard. Like that's just not a possibility. So my view is, every time someone puts a barrier up to me or a gate I have to jump or whatever, I think of it as an opportunity to test whether I'm right or not. And I said I would stop this if somebody put something in front of me that was so compelling that my product is wrong, my solution is wrong, the problem is wrong, the clients won't buy it. Like what any of the number of things that kill startups. If someone puts it in front of me, I promised myself I would recognize it and I would stop. But conversely, I promised myself if that never happened, it ended up being a pot. It's like, oh, they're right, but it's not like I joke about like a stake in the heart. It's not a stake in the heart. It's a pivot. It's this solve a problem. It just makes you better.
Mhm.
And so, but it's sort of lonely and a little scary sometimes, because you don't really know.
I get it, because I'm an entrepreneur too, so I know those feelings, right? And sometimes you are just like assuring your team, because one thing I noticed about like being an entrepreneur. Okay, let me give you an example. It's so difficult to say, let's say you have a new business and you hire a business manager to handle it. except maybe it's like a franchise, right? Which means all the systems and everything
That's
has
right.
already been decided. But like a new business, you're building a new brand. That's because for somebody to function as an entrepreneur is as if imagine this head is a computer, and then you're taking in data, analyzing, then throwing out output to test in the market, and then collecting data. Like sometimes I see myself going to look for something and I discover something else. But if we were to sometimes even give out that task, the person can provide the best report on what you ask them to analyze. But as an entrepreneur, you go there, you pick up something very different. So
No,
being an entrepreneur is like a very special skill, even that can sometimes be underrated.
yeah, and that's it's a great segue to, something that's very core to our company that you mentioned is that our client is the entrepreneur. Always is never, and it's not to say the other people aren't important. It's what you said, is that only the entrepreneur, the reason we chose this as part of our ICP product market fit is only the entrepreneur is going on that journey. And to be honest, if a company has an entrepreneur not going on that journey, it's probably not going to be a successful company. Like they need to be doing what you just said.
Mm,
So part of the reason we don't think that this problem is getting addressed is because even if it's being addressed at the bookkeeper level or the accounting level, what you brought up is that we want to work with you to give you more time to do more of that, but more importantly, give you the data and do the work to present information to you in a way that you can use it.
mm,
Somebody said, well, why is your domain Investmint app? Part of it's because there's a lot of people squatting on in various investments, but part of it is that we have everything we build has mobile in mind to serve the entrepreneur. Because how many entrepreneurs are sitting at their desk, opening up Excel, logging into accounting software? No, never. They're in their company building something, they're on the road selling, or let's be clear, maybe on the cottage on the dock, but in no scenario are they ever sitting there with a bunch of data. Like, our tagline is the world is drowning in data and we're in a desert of information. Like data is not information. Data is not a strategy.
mm,
Data is not execution. So we're doing all of that to amplify as if the founder had 20 more hours a day.
mm. Beautiful. That's good. Okay, let's look at how do you stay informed on the changes in your industry?
Yeah, the good news is I have a bit of an odd personal background. I have a history and English degree. I
Mm,
was a self-taught developer with a history and English degree that worked actually originally in technology, then ended up going back and do my MBA eventually, and then the rest of it. But your early days are very formative. So I'll always be a bit of a history and English major. So I love to read. I'm very so
mm,
like one of the things that I do is like every morning I read 3 newspapers, sometimes actually physical newspapers still. I read The Economist, I read Financial Times, I read specific material on like the ETF market, finance broadly, what's going on in startups. So I'm constantly reading. And part of the way we actually understood some of this value, some of that's for me personally, some of that's for me in the business. What we realized was that a lot of the information we're reading was what our customers wanted to ask about. Like you'd be surprised how often we talk to an entrepreneur and they want to talk about tariffs, but they want to talk about it in a very pointed ways. So what does that mean for my business?
mhm,
People are like, one of the things that when we started evolving from just looking at interest rates for like investments and saving, the flip side of that environment is the cost of borrowing. So we explain to people, how does this environment affect your investing rates, but also your borrowing rates and various things. So we actually realize that part of this reading and staying on top of this, because the beauty of why I love finance and why even after 20 years of it, I couldn't get enough. I quit and started a startup in it, is that part of it is our ability to source information, analyze it, contextualize it, and then customize it for our customers was actually part of our value,
mm,
which is why we couldn't put it all in software.
mhm. I get you. Hmm. Being an avid reader, that's amazing. Do you have any book recommendation for me? I love to read too.
Yeah, I know there's one book and it's so old and I had it out recently, but it's so valuable. Is there's a book called Against the Gods. It's a book from about 20 years ago. It is written about the history of mythology, weirdly, and
Mm,
the intersection of mythology when science and math and science started appearing. So you're going to say, what does this have to do with finance or investing? But
no, that's
bear
good.
with me. Is that so? The reason people believed in gods, the thesis of this book, which I believe to be quite true, is that because you tried to understand what was happening to you. Like, because remember, this is thousands of years ago, things would happen and it's just like I didn't know why. And it
Mhm,
just felt like things were always happening to you. And what he explained was that's why we invented the gods, because you had the god of war, the god of love, and it made
mhm,
sense of the world that explainable. But then when mathematicians, the earliest statisticians showed up, that's why they were considered heretics.
mm,
Because what happened is the concept of risk was invented. So he goes through the history of the earliest mathematicians were actually risk managers. And we look, I know you do a lot of personal investing and I love it. And this and the rules between what I call professional and personal investing need to be broken down. There is no such thing as a return. There should only ever be risk and return. And people in the individual investors only ever talk about return.
return.
And so this book explains risk in such a eloquent, human, non-technical way that all of a sudden you come away and you feel that you could have saved Silicon Valley Bank from going down because you understood risk management so well, right? So that's one book, even though it's old, and I bring it up because I literally brought it out recently just to kind of I was thinking about something and I just needed to get the mindset right, and
Mm,
there you go.
thank you. I'll check it out. I'll check it out. Okay, and I love your concept of the idea of risk and return, right? That's because when you leave it as only return, then it's like somebody can be telling you how to get 200% return, right? But the point is, what's the risk?
Yeah, and so that's where, back not to make everything about, investment in the company, but we only speak about in banking and people who worked in like a trading floor release like
Mm,
risk adjusted returns
mm,
because there's two things. One is just common sense. You cannot compare two investments on return alone. You need a common factor. So
mm,
the risk return ratio is how you can do apples to apples. So to your point, if someone's going to offer you 200% return, but the standard deviation of that is 400%. If you take various investing statistical models, the return on that may not be very attractive.
mhm,
Whereas you could take a return on something that might only yield 15%, but then the standard deviation of it could only be 2%.
mhm,
And you would be better off with the 15 than the two. So that's why we're always talking about you need a common denominator to compare individual investments, but also investment strategies. But also this construct of we have this rule is that you can't on any given day if you're in that part of our company where it's
mhm,
like corporate,
mhm,
on any given day you can't lose money, and that is a constraint that's built into everything we do as people and everything the systems do, and that's a constraint. Like we're not looking at stuff that's making 7% or about higher, but
mhm,
we force ourselves to optimize for every what we do is every ounce of return has to be at that optimal least amount of risk.
mm. I
And
get.
that's why the entrepreneur, a funny caveat or end to that story is that another reason we want entrepreneurs is we want people whose income is primarily derived from their company, but also eventually their net worth. And he said, this is going so well. There is a holding company in my corporate structure for tax reasons, which we can talk about another day. And he said, I have $3 million there, and no one, it's not personal money, so nobody wants to invest. My broker doesn't want to invest, it's just sitting there in GICs. It's that he's like, let's do it for that. So
Mm,
that's kind of like we're in our business. There's two things. We only want to do what we do well, but the beauty of our journey where we are now is that people, I sometimes I meet a potential partner investor and they say, you're everywhere and nowhere, Duane. I'm like, no, I might be everywhere, but I'm not nowhere, because there's a difference between me saying, I'm going to go do this, and someone saying, Duane, change this for me, adopt it to me, because I want to do this. And I think we can do it. And I think we can resell it. And I think we can scale it. So we're in that part now where we're starting to be more mature, even though we're not at the revenue stage, where people are saying, solve my problems for me, because now I see you're the right person with the right tools at the right time to solve this problem for me.
Hmm. Good. Okay, let's look at collaborators and partners. Are you looking for collaborators and partners? If yes, what kind?
Yeah, for sure. The way we've built the business is we are obviously going, for a lot of reasons, we will never give this up, is we are a B2, we're kind of to a B2B/C company. We are only dealing with businesses above a certain size for many different reasons, but we're focused on companies where there's an identifiable decision maker, again, with their income and their assets predominantly derived from that company. So there's an element of C in it, right? So the idea here is that we want to like get to them in a way that sorry, could you repeat the question? I just want to make sure I'm going to answer this
It's okay.
correctly.
So the question is, in terms of collaborators and partners, are you
Right,
looking for any of that?
right.
And if yes, what kind of collaborators and
Okay,
partners?
so I was on the right path, but I occasionally go down rabbit holes, so I want to make sure.
Okay.
So that is passion for us. But if we're going to do that, one of the things we want to do is not just rely on a very incremental way of getting to these customers.
Mhm.
So we want to get them at scale, because we do think that we have attractive margins. So ironically, one of the first things built into the company was banks. We came from banks. It was very designed intentionally. Unlike other fintechs, we are not becoming a bank, a broker dealer, an asset manager. We're not a counterparty to these transactions. And
Mhm.
we, for two reasons. One is we don't believe that a lot of those products and companies are stable enough to provide the services they do. And if they are, they often don't have enough a breadth of service that our companies need, our clients need, because they are potential clients, because they're sophisticated. So
Mhm.
one of the things we also didn't want to make the TD Bank or whatever angry. So one of the things that we've had built into the beginning and had some very encouraging discussions with was actually partnering with the banks, because one of the issues is the banks themselves struggle to manage and advise and deliver service to this client size. We are very keen. We haven't had a lot of discussions yet with actually the accounting side, the Sage, Zero, QuickBooks. We're not a competitor. Like we don't want to do accounting. We want to build as little automation, technology, SaaS, AI as possible. So we want to sit on that data and help them pre-aggregate it, pre-structure it. So but then again, a lot of fintechs are trying to steal business from them. So we're saying this is synergistic, because you can get a revenue stream that you wouldn't get otherwise. But more importantly, you're now offering a service that is part of the lack of that service is why people are leaving your company. To accountants, like old traditional accountants, anyone who really touches on our ICP in the right areas, so finance, accounting, legal, various things like that.
I get you. Okay, let's look at what your core values are and how they've influenced, like, how do they influence your business relationships?
Pardon me, I missed the first part.
What your core values
Oh,
are?
core values. So yeah, so the first is the idea of, like, how do I say it? Working in finance, there's a terrible quote from the first financial crisis, where the CEO of Goldman Sachs says, "I'm doing God's work." Let's be clear. Like, working in finance, making big company work isn't doing God's work. But I do feel personally, I feel that at this stage of my career, I want more, something to drive. That's not that. And I think younger people who our company may have older people, but we try to compensate with younger people, is that we want to really help entrepreneurs. Like this idea of let's do some good. Like entrepreneurial is the cure for so many diseases.
Mm,
Business ownership, like, as a tool of rise of social equality and things like. I'm a real believer. My parents came here in the 70s from Jamaica with nothing. And it means something to me that it's harder. If I showed up today, I always say it wouldn't work out today. So I that is sort of core to us that we need these people need this help. So it's like we're zealots on getting it to them. The other piece that's a mission is how we go about solving. And this I do believe is doing God's work. Is we made a conscious decision that we're going to target that type of potential client. But when we build our company, we are going to build this around, and people who know me from the days are going to laugh when they hear this. We are building this around women, women of color, immigrants, people. There are three things that we need in our company. We need finance expertise, we need technology slash AI, and sort of like quantitative finance, like these sort of stools. They're related, but they're
mhm,
different, and all of them, women are disproportionately underrepresented. And within women, there's a huge for women of color, immigrants. Like we're not doing this as charity. We can't afford the best and the brightest in terms of cash compensation. We can't even attract them from a future equity value if you took equity. What so but we will not compromise. My one of the greatest compliments my partner, and he doesn't give me a lot of compliments, gave me was that on one of the first calls when we finally got everybody together and was starting to build this, and he got off, he said, that is a better call with a better team than we could have built at the bank. And you did it with like nothing. And the magic was looking differently and thinking differently about how we would get that talent. If you're not going to sacrifice talent, you have to look differently. And so that's critical to our company. It is literally is important of why what we're doing and why is how we're building it.
mm. Okay. Let's look at your current funding status. So, are you bootstrapping or are you funded by investors?
I'm bootstrapped. I have a terrible joke that I say one should never wake up next to their financial backer in the morning in bed, but my wife is my financial backer, and she's a tough person. Like, so I try to triage things. So we do leverage programs like there's funding for water, like for co-ops, there's MyTax, there's various, all the startup people know these. So we leverage as much of that as we can.
Mhm,
There's other forms of sort of non-dilutive financing, like limited amounts. But so I try to amplify every dollar. But the way I do this is I also why it's so critical to find until we get revenue, non-revenue milestones that give me visibility and de-risk things so I can write another check. And
mhm,
right now, even though it's these first clients, when they do convert, let's not say if, but when, it's not like obviously they can't cover the fixed cost of our company. But again, it's that step where it just puts a little bit more money into the company, a little more visibility. We're going to build this out to the 10. We're going to do this really thoughtfully and slowly, which is again not classic startup. And what we think we know what we need to do in that 10 to demonstrate like a classic formal pre-seed. And
mm.
probably in the spring to summer of next year.
I see. Okay, that's good. Let's look at what's your vision for the company?
I'd love, I have delusions of grandeur, but I would love to I say like a banker and trader on every desk. I would love every entrepreneur. It's almost like science fiction to log into their computer or whatever it's going to be, their meta
Mhm,
sunglasses, and be able to say, "Hey, Duane, this is the problem today," and we would love to be there and just say, "Yeah, like either we're solving this for you, solving it with you, or we're going to find the person that's going to solve it for you, obviously within our expertise.
mhm.
That's my dream, is just that every entrepreneur who wants it and needs it has real quality, like independent advice that
Mm,
just benefits them. And the second piece is like we also know that um, we can build software that I call it where the tail doesn't wag the dog. Everything we build is even, and we believe we can scale, is built for the way you work for your company, not you spending. When somebody says they're customizing this period, the software implementation, they're teaching you to stop doing business the way you're doing it and do it the way their system is built. We'll never do that. And so that's a part of this dream, is that not only do you have us there and you get the advice, you're actually getting software that's going to like automate you in a
mm,
way that really elevates you and your company, because at this stage you just don't have a lot of resource.
mm.
And we're going to get you better technology people, better data than you can afford because of the economics of scale.
I get you. One of the things I want to shine light on that you've mentioned is this, like being an independent, like giving that independent opinion where you are not attached to any particular products. Let's say, for example, from investment side, you're not attached to any particular product. You're not making more money if somebody is buying a particular thing,
Exactly.
because even when someone says, "Oh, I'm independent," but if what they advise you to do determine how much they are going to get, then that means that there is still bias somewhere, as much as they try to eliminate it, right? So that's a kind of insight that makes a difference, even though sometimes it's very different to differentiate it from other kind of insights out there. When somebody is giving you an insight that, irrespective of what you do, is not necessarily increasing their own pay or not increasing it, at least you.
Human nature is human nature for a reason. Like it's hard to say that I could have this incentive to do X, but I'm going to ignore it. Like it's not, that's not humans work. I mean, I'll give you a great example. One of the banks that we spoke to said, "We're never going to partner with you because just so you know, those deposits fund the bank, and we're never going to pay. And so we don't want them opening investment accounts and investing it because we need that money." And I said, "That's you." I kind of joked. I said, like speak into my lapel because I'm recording this. And he had a heart attack because he knew it is like, it was such a classic example of what you're saying. It's like literally you took like an oath to take care of your clients. And you're saying here, no, I will not have them I will not offer a product that reduces our deposits,
Mhm.
even though it comes, we haven't shown them how it works out in the end. But
I get.
like that's terrible. So, and even the fintechs, that's what's disappointing to me, is if you think about the neobanks and the fintechs, they are just tying you into their ecosystem. Like they're not reducing bias and no one and conflict, and no VCs calling it out. Like that's why I love that what you're doing in your show, trying to educate people independently, is that you need to understand that if either you should teach yourself to do it, but even there's limits to that. And
Mhm,
once you get to that, you need to know that it is everywhere and you can't see it, that there's always this invisible pull of someone
mhm,
steering you to a decision that
mhm.
benefits them more than you.
Yeah. uh, we can't talk we can't
We
talk
got
about
to
that
cheat on that one. Yeah.
Yeah, because like one of the things I was explaining to someone a time, and I was giving them an example. So this is a related topic, but still on this independent insight, right? So the company they work with had said, "Oh, we're going to send you to a wealth management company. They'll tell you what to do." But this is not the problem. So they according to this person, which I saw the document. So they'll give you these documents that every other investment that is not theirs is like in a link, right?
Right.
And when you click on the link, you open a document, a PDF document that have graphs, uh, you know, um, bar charts, like things that normal people would just be like, close it, because they are not accounting majors
Yeah,
and
I get it.
economics majors. And then, so this is how a lot of even the ETFs or things were presented. But on top of the entire PDF that have links to other things is like 4% guaranteed. Bold. Number first one, bold. And this is if you give them your money. There's
Mhm.
no, for me, this is their business. So I'm not bashing it, but I'm just saying how this person is already conditioned to ignore every other thing that looked like an alternative choice and to just go with the one they can understand. In the end,
Yep.
they present it with one sentence, and the rest are in graphs and this and that, right? So in this case, this person is telling you, you have options, but psychologically you don't, because there's one simple thing you can understand, a bunch of others you can't,
Mhm.
you know. So
Exactly.
um but irrespective of the good that the company is presenting at that point, I'm just shining that light that how can you say he's independent? And if he's not independent, how can you be so sure that uh, it is in your favor? Do you
Yeah.
get it?
And tying it to why we picked on entrepreneurs, it's not saying it's more important than an individual, but you're even more alone in some ways because you're saying like I have no one to talk to, and you're already alone as an entrepreneur, and you don't
Mhm,
trust anybody, because like everybody's trying to get a dollar out of your pocket.
mhm, mhm. Yeah, I get it. Okay, let's look at. We've talked about your vision for the company. What advice do you have for someone who is starting their own entrepreneurial journey?
Yeah, I think is understanding what someone's motivation is when they give you advice. That's something that was like, and even though I'm older and maybe a little wiser, I
Mhm,
found this difficult. I'll pick on this idea of like if I spoke to a VC, they would say, this you need to live with the problems. Like you like, don't build solutions, build problems and spend time on problems. And then what they told you to do, or the only way to do it, was to work on the solution, not live with the problems. And I was like, so you're getting confused because you're getting a message. They're trying to condition you to make their job easier. They're trying to come in and say, I invest this way with this process, and the more you conform to this, the easier it is for me.
mm,
It doesn't matter if it produces a better product or this or that. It's like, how do you make my life easier? Even with the best of intentions, that's what's
mhm,
happened. And so that's why we moved off this classic scale up and said, we're going to do 10 customers this year, and that is it. And if VCs want to pass on that, great. But when we come back and we've got the 10 and we've proven it to you. But then we're actually doing what they said, like live with the problem. But you can't live with the problem when you have no money and you're going to live with 100 people and then get to 1,000 people. How do you get there? So we said the only way was we stopped listening to them in the sense of we tried to understand what they were trying to do. They're
mm,
saying we actually have no idea about your customer or the problem. We just know how we need to assess you. So we
mm,
said maybe there's a different way to do this and
mhm,
come back to them and still get them what they wanted, but we cannot do it through their process
mhm,
because we're breaking, because we don't fit their process, and we're compromising our strategy or whatever to fit to their mold, but we think we can get there anyways. And
mhm,
so we got off the path. I'm bootstrapping more and we're going to do this and come back. So it's just an example. It doesn't have to be that where you're going to get, if you're lucky, you get a lot of advice. And when you get this advice, it always comes with, again, maybe this is another variation of the conflict of interest, is they're
mhm,
giving you advice that benefits them still
mhm,
at some level.
mm. Yeah, conflict of interest. That was the phrase I was looking for before. Yeah, good. And in my opinion, what you're doing is brave, even with the path you've chosen, because that is something a lot of people may not feel like they have the luxury to do. You know, and it's important to shine light on that as well. That this is another way to think, because when you are just pursuing that way that everybody is following, soon you are not even so special, right? Soon you're not so special, but everybody's looking for that business that is unique, that is unique. So, but if you try to just fit in, but eventually people are still looking for unique businesses, right? um I remember, so I had this thought last night. So it's interesting that we're talking about it. I was working on some of the questions I was going to be discussing with you today. This is like middle of the night, and so I just put on the music and I turned on the artist, Don Moen. You know about him?
Hmm.
And this his music is so chill with the words and just so, and I was like, how did this man do it? For years, he kept singing this way, even when new beats came in, new type of way of doing music. Like I was having this thought, like he's so unique. Like if I ask you to play Domwe music, you actually know the type of music I'm talking about. You know what you are not going to
Right.
see. Like
You have to know it though. You
yeah,
can't describe it necessarily. Like you just got to
yeah,
know.
just so different. I kept wondering, like, even when things changed along, he's quite old now. So even when things change along the path in terms of how music is consumed, how did he do it to be even still remain the Domwen and produce Domwen kind of music? So I was having this thought. Like the point is, we still all appreciate what is unique, but it is so difficult to remain unique. The gravitational force is to push you towards conforming, towards joining the
Mhm.
crowd. So I'm just trying to give more explanation to when I say what you're doing is brave. I mean it.
Well,
and
I agree with you in the sense that, and I do understand, like we sometimes we get the feedback, oh, it's a crowded space or it's this or that. And sometimes they were wrong because they just didn't understand the nuances, but sometimes they were right. And back to knowing when to listen. And so when I decided to say there's always going to be risk, back to risk and reward. If you're an
Mhm,
entrepreneur and you're not taking risk, then you're not running your business. So I decided I could take the risk of trying to do it the way everybody wants me to do it and
mm,
fail on their strengths and my weaknesses or their knowledge versus when I said no, let's do this the way I have knowledge. I'm talking to the actual clients, they're not. And the biggest issue is people think that we're not scalable. So I would rather try and fail on that different point that everyone else is avoiding than
mm.
to go the other way. And I will be proud to have failed that way. But I have a massive ego. My wife knows I'm a massive narcissist. So and it's going to take a long way before I feel like I'm sort of wrong. So
I get you. How do you, but talking of your wife, you also mentioned you have two kids. The other time, like reading more about you, how do you, maintain work-life balance?
yeah, it's something I've gotten a little better with as I've gotten older. I I try to I have this quality over quantity number one, which is if I try to think about things very deliberate. I put up some barriers, but sometimes you can't. Like you can't. You just
Mhm,
can't. Like you're an entrepreneur. You have to be at other people's disposal on their schedule. So what I try to do is communication. Like you are my priority, but I sometimes can't do that. But then when I am available. I'm all in, I'm fully present. I make them know. So that might be less quantity but higher quality.
mm,
And just make sure that there's like really strong communication. And that idea, like when you're there, then you're really there. Like you're not half there. You're not on your phone. You're not thinking about the
mhm,
updating your slide deck or whatever it is.
mm. I see. Okay, let's look at, how can we learn more about your business? Like
Yeah,
website or handles?
we're just in the process of what we kind of put out initially was coming out of stealth mode. We needed to have some things so that when we spoke to clients, we were credible, they had some idea. We're literally in the next, probably over the course of the summer, because it takes a little time, we're going to relaunch the website. We have a bunch of things that we want to go to market with
Mhm,
that we've been incubating, partially business model, things that where we can, we want to get out to clients. Like we joke that what we really need is like building a bridge from a river on two sides.
mhm,
We need to kind of build our half of the bridge to make sure that the product market fit, the ICP. But we want to look for we've met enough people that we know that we call it's like who needs a pen. You shouldn't try to sell a pen to somebody who doesn't need a pen. we know and everybody agrees that there's lots of people that need pens, but there's this asymmetry of how to figure that out. So what we've been trying to do, because we don't have a big budget, is come up with some really interesting, whether they're partnership based, outreach based, combination of, like, we've created a series of free product that we're and some introductory products, so that we can do, for example, like we call this financial audit, where we have a free version that we're prepared to do, and you keep it, and it's not, it is high value, it is giving away something for sure. And we have a paid version of it that's more detailed, and so we're just going out and we're going to engage, but we're not going to be one of these people who puts, like, I don't know why people are putting their ads on the sides of buses and stuff, like, these are not, like, that doesn't make any sense. So we'll never be in your face, because we're looking to get to the people who want the pen. So I'm going to try to come and find you, as opposed to the other way around. Like, we're building ways to find you rather than trying to blast the market, trying to get so that you find us.
I get you. Okay.
But you'll see more, and we're very appreciative of you having us, because we're going to do a lot more events like this. We're producing very customized content, value-added, real-time content. So we're going to be pushing it out in various channels and things as well.
That's good. Okay. What question do you wish that I asked you that I have not asked you yet?
That's a good question. I almost have a question for you, which was, what attracted you to me and Investmint? So I'll answer your question with a question back. What did you think would be, because you obviously do this very well and you have an engaged audience. What did you think, or what were you hoping that your audience would get out of this?
Oh, I get your point. Well, when I saw what we're doing, which is talking about using some systems, using softwares, with a little bit of AI as well, to help with cash flow and the other things, right? I felt generally I because I deal with finance, but it's just a tiny portion of it, right? There are people who are dealing with other tiny portion of it. I want people to hear from those persons as well, to see how other people who are in finance, what are they doing, and what can we learn from those persons as by listening, right? And because sometimes somebody can find my page because maybe they're interested in finance, but they may not necessarily be interested in the exact type of finance that I do, right? So it's always my goal to bring other experts and hear from them. That's it.
Amazing.
Yeah.
Well, I hope I delivered that.
Yeah, sure. And it's even more interesting that we agree on a lot of things, like independent insights and truly independent insights, and being unique, trying to offer something different, not following the head most of the time. So there's a lot of good things there, and I'm happy to, like, sometimes too, if you are doing it on your own, it's like, oh, you are alone, and when you see somebody else doing it, you're like, whoa, I'm so happy to find someone else who is thinking this way, so that's good.
Amazing.
Thank you very much. It's been awesome having you. We've spent quite a lot of time, which is because the conversation even got more interesting than I thought.
Oh, I'm glad.
So
well, thank you very much, and thank you to your audience, and hopefully they found it enjoyable.
Sure. All right. Okay, to everyone watching, thank you, and take good care of yourself till we see you again. Bye.